Hello traders, my name is Gregor and welcome to a new video analysis. Today I will give you an update on the euro dollar, Aussie dollar, gold and the S&P 500. On the euro dollar, as now we are tracking a corrective advance against this 5-wave decline. So if this is a temporary pause, if this is a correction, then we know that this 3-wave ABC rise from this level must not retrace more than 100% of this move. Okay, so this is our critical invalidation level. We are now at 61.8% retracement area, which is very important zone for a potential sell-off. Okay, so now we will go back to the 4-hour chart, and you can see here that we are tracking an ending diagonal placed in wave C because of overlaps here between waves 2 and wave 4, and we also have seen some very choppy price action lately. This is very typical for ending diagonals because in ending diagonals the volume is very light, momentum is decreasing, which is the characteristics of this pattern. Okay, which signals for actually shows an early evidences for a coming reversal in a trend. Okay, we also have here a bearish divergence on the MACD. So I think that this uptrend is tired and that sooner or later we will see a push lower. If you recall, in our past update we noted that we think this was a wave 4 and this small bounce was a start of wave 5, which has successfully moved through this wave 3 swing high. So we are now testing this upper trend line of this pattern, which is also very important, and we can already see some bearish reversal signs. But as always, we need stronger evidences that this pattern is complete. So in other words, we need an impulsive 5-wave decline on the intraday basis, either back to this lower trend line, but ideally through this support of wave 4. This will be then quite strong indication that we are headed lower, even if just in larger 3-wave movement. Okay, so for now I'm still not sure if that's the end of wave 5. We still could see a spike into a new high before market reverses to the downside. Okay, but I will definitely be tracking these wave counts very closely on the intraday updates page. And now let's take a look on the Aussie dollar. If you recall, the last time we were looking lower on the Aussie dollar, we said that this was wave 1, wave 2, extended wave 3 and wave 4. Well, we were tracking a 3-wave movement, and unfortunately we didn't get any impulsive sell-off from this wave 4. So actually this move just extended higher and invalidated our wave count, because we can see a very deep overlap with this level. Okay, so obviously this was not an impulsive decline, this was a 3-wave decline where wave C was extended lag. So if this was a 3-wave decline, then we know that this is wave B. Okay, wave B of a very complex correction. So with that said, I think that the market is still placed in wave 4, which either could be a triangle or maybe even a flat if this wave C will unfold in 5 waves and will move close or maybe even through this previous wave A swing high. Okay, but in either case, both patterns, triangle and patterns, are corrective patterns. So I will look to the downside once these patterns will complete. So here is our also daily chart. I think that we will now see a corrective pause in wave 4. Okay, also this is very interesting why I'm observing potential triangle here. If we are in triangle, as I said, then we are now in a wave C lag. This was wave A, wave B, wave C lag. And the very interesting thing why, as I said, I think that's a triangle is because of this 50 period moving average. You can see that market has been trading beneath it for some time now, and always when it was tested, the market reversed to the downside. Okay, so maybe now we will see something similar here, and if we will see a reversal lower, then I will be even more confident that we have a triangle in progress. Okay, so I will definitely keep a very close eye on this 50 period moving average as well. But in either case, as I said, even if a triangle, even if a flat, both patterns are still incomplete. If triangle, then expect more sideways. If it's an expanded flat, then expect push higher and then wait for an impulsive sell-off to confirm the weakness. Okay, now let's take a look on the S&P 500. On the S&P 500, last time we were also looking at this monthly chart. Obviously here has nothing changed. We are tracking an impulsive rally. We are now in this black wave 3, which I think is still incomplete. Okay, now let me switch to the weekly chart here, and I will just label the wave counts very quick here. This is the black, so we have now blue letters. So we know that if we are tracking wave 3, then wave 3, I'm talking about this black wave 3, must contain 5 smaller waves. So this was wave 1, wave 2 pullback, nice extended wave 3 in the middle of wave 3, wave 4 pullback, and now we are headed higher in wave 5. And because of this larger Fibonacci projections levels, and also because of this wave 1 distance, I think that this wave 5 is still incomplete, and we have room for further strength here. So now we will take a look on actually firstly on the daily chart, where you can see here wave 1, wave 2, extended wave 3 that we are just talking about, wave 4, and now we are headed higher in wave 5. Now first leg in this wave 5 is probably complete, and now we could see pullback in coming days back in wave 2 before we move even higher. So here's the 4-hour chart, where we can see the reasons why I think that first leg in wave 5 is complete, because we have 5 waves up: wave 1, wave 2, wave 3, triangle, and wave 4, wave 5. We know that after a triangle the final thrust will occur, and this is final leg of a larger sequence. Okay, so I think that this is a fifth wave. So if that's a fifth wave, then we know that this impulsive leg is complete, and if impulsive leg is complete, then we know that corrections will follow. Well, corrections are free wave patterns. Okay, so from minimum perspective, we expect at least 3 waves to the downside. Now always when correction occur, you will typically see a retracement back to the region or termination point of a wave 4 of a smaller degree. Okay, so this was is our wave 2, which is larger degree. These black letters are smaller degrees, so ideally we will see a test of these levels. Okay, and in fact, as I said, this is only first leg down. We need 3 waves down. Now this is only pause within this 3-wave decline. The move is also very slow, very choppy on the intraday chart, so I think this is a correction, and that we will see move to the downside as long as this market is trading beneath this high. Sorry. So we are looking lower on the S&P 500 for the near term. Okay, and now let's take a look on gold. On gold, firstly let's take a look on this daily chart. We identified end of a 5-wave fall here in wave C. Why end of a 5-wave fall? Well, because I can see a push through this trend line connected from waves 2 and to end of wave 4. Well, this breakout suggests that, as I said, that 5th wave is complete and that we are headed higher. As I said also earlier, typically when market will reverse, when 5-wave patterns are complete and market is forming a reversal, like in our case a reversal to the upside, you will typically see a retracement back to the region of a previous 4th wave. The middle resistance line of a wave 4, or I should say pivot from this wave 4 triangle, comes in right here. Okay, this was also end of wave E in wave 4, so ideally we will see test of these levels. Well, I'm tracking also another different wave count. Here it is, which suggests that this decline is incomplete. It's a little bit different wave count because I labeled this wave B differently, but anyway, here the wave count suggests that we have more room for weakness here in wave C, but still, because of Elliott wave guidelines, I think that wave 4 will move even higher. Okay, if this is wave 4, because typically you will see that wave 4 will retrace for 38.2% retracement, which comes in very close to this wave 4 termination point. So even if you're tracking this wave count, or this wave count, in both cases we expect higher levels. And now we will switch to the lower time frames charts, to the 4-hour chart. Where is the reason why I think we are headed higher? Well, because look at this price action. This decline is clearly very slow, very choppy, very overlapping, contained by these parallel trend lines, and more importantly, this decline cannot be counted impulsively. We know that these slow price actions, okay, very choppy moves, are corrective patterns, are pose within the larger trend. So in our case, I think the larger trend on this 4-hour chart is up, because we have seen here very strong moves to the upside. Okay, so these are impulsive qualities, while this move is not impulsive, it's probably corrective. The next important thing is that I can see a very decisive push through this falling trend line, upper trend line of this downtrend channel. So I suspect that this is corrective decline, maybe already finished here, and that market is headed higher. In fact, this appears to be a 5-wave rally from here. So obviously I will be looking for even higher levels as long as the market is trading above this swing low. Okay, and when the correction is complete, of course you expect that this correction, the previous fall, will be fully retraced. So I am looking higher on gold, and even if from any reason we would see a sharp reversal next week to the downside through this level, I would still be looking lower, but again, in this case I would have to rework the wave count, and would be even more complex wave to be as it is now. But the important is that this is corrective movement, and that higher levels should be seen. Now I'm also tracking this 50 period moving average on the daily chart. We have seen slightly push through this line in the last few weeks, and we can see now very slow price action, and this 50 period moving average is now trying to react as a support here. Okay, then look at this candlestick formation. I can see huge body to the downside, then doji, and body to the upside. Okay, this is called a morning star which is a reversal pattern and suggests that this market has bottomed here and that we are headed higher. Okay, so if we respect the Elliott wave rules, the personality of the price action, and candlestick formations, then I think this market is set up for a retest of these highs, most likely in the next week. Okay, traders, that's it for me, and I will see you on Monday. Have a good day.